Ellis, Senior Managing Director at SVB MoffettNathanson. Thank you for coming here in person as well, especially for people who are going, what are you talking about, $200 for Coinbase? Tell us why you still see such significant upside.
Yeah, look, obviously it's a very rough period right now in crypto land. But Coinbase, you have to remember, is a publicly listed, fully audited, fully regulated Western player. And, what doesn't kill you makes you stronger, right? As this flushes out a lot of the bad behavior, a lot of the sort of unregulated activity happening around the world, the remaining players will consolidate a lot of the strength in crypto onto them. And I think Coinbase is one of those players.
What happens, though? I have to imagine Coinbase effectively trades with the amount of trading revenue on the platform. And if the interest in crypto has gone from, has gone to a tenth of what it once was, isn't that a long-term problem?
I mean, it's a problem for now, for sure. But we've gone through these crypto winters before. And you have to keep in mind that while we go through these crazy peaks, like Bitcoin, which is still currently sitting around $16,000, is still up 2x from where it was even 3 years ago, 4x from 4 years ago, right? It goes through these wild swings. But a company like Coinbase that's been around for more than a decade kind of knows how to run their business through those cycles. So, yes, revenues will be down, but they've also brought down expenses. They've prioritized investments, and they're in it for the long run. They're sitting on $5 billion in cash.
Wow.
And really not burning through right now a meaningful portion. They're negative, but maybe running 300, 500 million negative. So they can outlast this, even if it lasts through 2023, even into 2024.
And to state the obvious, they've emphasized that they separately, they're separate custodians. I don't know what the correct lingo is of customer funds, right? So the big question has been, do people panic and pull their money off Coinbase and say, forget it with these exchanges, but custodying your own crypto is very, very difficult. And so do you think they'll be able to kind of take that message to the client, to the customer, and say your money is safe here, it's not going to be like these other platforms?
Yeah, they should. I mean, they have obviously segregated accounts, as you would expect from a Western player, and the SEC, oversees this. So it's literally right there on their balance sheet and their filings. You can look at it. Now, certainly they're experiencing jitteriness from investors, particularly institutions, that have to report back to their own LPs, right, who are pulling back from the space. But they highlighted last quarter, we'll be curious to see what they say this quarter, that while a lot of their consumer investors are trading less, they're not pulling off the platform. They're just leaving the assets sort of sitting there for now while they kind of wait this out.
And to that point, can Coinbase then, I don't know if it's exactly like a bank, but can they take those funds, earn their own interest on it, and then, try to kind of earn a profit that way?
Yeah, absolutely. Their revenue stream, which includes interest income, which is making money off of the assets that are sitting there on their platform, has jumped from only single digits of revenue back in 2021 to now is over 30% of revenue. Part of that, of course, is because the trading volumes have come down. Yeah. But the important part is that it shows they are diversifying those revenue streams. And yeah, in a rising rate environment, they can benefit, like any other bank can, where they can make money off the funds that are sitting there.
Maybe we can show it on the screen as well. But what is it trading at in terms of the multiple today? And how do we get to $200 in terms of earnings that you foresee, and what the multiple is at that point?
Yeah, so we're looking out, that's a one-year price target, where at that point you'll be, looking at 2024 performance, and even expecting a very modest recovery in crypto. So meaning assuming like this is as bad as it's going to get right now as we're dealing with the FTX collapse and the fallout, and it sort of stabilizes and maybe follows a similar pattern to what we saw in the last winter, which is 2017, 2018, on 2024 numbers, our numbers, which is, again, a very modest recovery. It's literally only 2 times EBITDA. It's sold off that much, right?
Because didn't you used to have like a $650 price target? I feel like I remember talking about this. So what is the big change from $650 to $200? Just the lack, or $600?
Yeah, $600. Yeah. So when we initiated $600, right, that was in the peak. A lot of this is about just anticipating exactly how the cycle is going to look and the timing of that. At the time, we were, pegging off of an expectation that the cycle would sort of sustain for a little bit longer. It didn't. It's come back. That's fine. We reset earlier in this year, like back in the spring of this year, once it was clear we were in the winter. And then now, like I said, we're just sort of watching, and monitoring to see. But really, you should be looking out at 2024. And if you believe that crypto as a technology will persist and will recover, Coinbase is really the only publicly listed asset that you can buy in the space. So I wouldn't necessarily recommend a major position in Coinbase. But if you have a long-term time horizon like that, this is an unbelievably attractive entry point.
Quick final word. I know we have to go, but does it all come back to the Fed? I mean, is this all just a reflection of those liquidity conditions, both for interest in crypto and obviously for the performance of a company like Coinbase?
Yeah, certainly, because it's a high growth kind of long dated asset. Like every other asset like that, it suffers in a rising rate environment, and so some stability in the rate environment out in 2023 will also help. In addition, we're looking for some regulatory clarity in the U.S., hoping that maybe in 2023, at a minimum, we see stablecoin regulation and things like that. That'll kind of, again, allow institutional investors to start kind of dipping their toe back in.
No one say now, that sounds reasonable. I don't know. Maybe it goes to 200.
It's not. It requires a strong stomach, that's for sure.
Lisa, thank you so much. It's good to see you. Lisa Ellis.